In addition to being very long-term, there are some other important characteristics of our approach that would really include the following. We're independent thinkers. We do much of our own research, and we always try to avoid being unduly influenced by other parties such as stockbrokers or the media. We are conservative analysts, and our research process always emphasises downside scenarios. And there are certain kinds of businesses that we're always particularly wary of. For example, companies that employ very complex and highly leveraged financing arrangements, or companies whose business model is either unproven or too difficult to understand. We tend to think of those kinds of companies as being too risky. We're opportunistic investors, and we're always looking to build our portfolios around stocks that are attractive in their own rights. And frankly, we're not interested in whether those stocks are listed on any given index or indeed they're weighting in any index. Our approach is team-based. For example, every new investment idea being considered for our flagship global equity fund must be presented to and then debated by our entire investment team. And that allows us to regularly reinforce the principles of our approach. Our funds tend to be quite concentrated. For example, our global equity fund contains approximately 80 stocks, and our EFI fund contains approximately 35 stocks. And generally speaking, our portfolios have high active share ratios. And we always pride ourselves on conducting very thorough research in respect of every investment idea that we're considering. The research process in Setanta centres largely on, though not exclusively on, the regulatory filings. For example, annual reports, proxy statements, and 10Ks. Our efforts can span several weeks to several months to complete sufficient research to be comfortable with the idea in question. And broadly speaking, the research that we do falls into one of two categories: quantitative research and qualitative research. The quantitative research involves a lot of number crunching, and here we immerse ourselves in the financial statements and the footnotes to those statements spanning many years. And the aim here is to establish a detailed understanding as to how the business has performed over time, why it might have performed that way, and how the business has been financed over time. And so to achieve this, as we progress, there are certain items that we will look to analyse in particular detail. And there are some specific examples in the chart. The more challenging component is the qualitative research. And here our aim is to identify and then analyse in detail the major risks and opportunities facing the company, both operational in nature and strategic in nature. And there are certain areas that we're always particularly interested in. For example, the industry structure. We always want to obtain a detailed understanding as to how the industry works, how it functions. What are the main factors that might potentially affect supply and demand in the future? And the management team, we want to evaluate their strategy, how well they've implemented that strategy in the past, and their compensation arrangements. We spend a lot of time assessing how management teams are incentivised. And again, to achieve our objectives here, there are certain items that we will look to analyse in particular detail, and there are some specific examples in the chart. The primary aim of our research process is to establish a detailed opinion as to how defensible the company's profits are and how defensible its financial position is. And that's critical for us as we consider how risky the overall business case is and how we're going to go about valuing the business. To a large extent, we think about our research process as being an exercise in risk management, because we think about risk as being primarily the chance that we might suffer permanent losses on our investments, as distinct from temporary losses, which can of course occur in situations where we deem that the share price has temporarily fallen to low levels. And so the better we analyse the business and the more accurately we value the business, the less likely we are to suffer permanent losses. So we've designed our research process to function as the primary means through which we manage risk in the portfolio. However, it's very important to say that we always take great care when we're constructing our portfolios to make sure that we always have adequate levels of diversification. And we always take great care when we're monitoring our portfolios on an ongoing basis to make sure that we quickly become aware of any new emerging risk factors that might require us to take evasive action quickly.